Hey everyone, welcome back to my channel. Today I wanted to go over one of my favorite Vol.land features, the Dealer Hedging Requirement Summary page. It is a great tool for knowing exactly what sort of impact the dealers will have on the asset at certain price points. However, there's some nuances to be aware of. Before we get started, I'll leave several discount codes for trading services I use in the description, including TradeEdX, Vol.land, and Elite Trader Fund. Lastly, if you enjoy this content, don't forget to like and subscribe to help me grow this channel. Also, be sure to hit the notification bell to get notified whenever I post a new video. That being said, let's just get right into it. So, I have here on Vol.land Tesla, and if we look at Tesla's chart here, we can see it's currently at 189.98, so we'll just call it 190. And so I've covered videos on this before on how I use Gamma and Vanna, and I'll do some videos on Charm and Delta as well in the near future. But starting with Vanna, I always look at the major Vanna levels because Vanna tends to have the biggest impact on an asset. And by the way, if you're looking at this, by the time this video is released, this data will be out of date, so please don't use this data to make a decision. Make sure you look up the data to get it for whatever it is the day you're viewing it. As you can see, this is the data as of February 5th, 2023. So we can see Vanna above is at 200, and it's positive Vanna, which means if IV drops on Tesla, on the Tesla contracts at 200 and the surrounding contracts as well, this will mean dealers have to start buying in order to hedge that. So it acts as a magnet. Now down below, we can see strikes 185, 183, 33, 180. It's weird that it does that, but it does that for some assets, in particular Tesla. I'm not quite sure why, but we can see it's negative Vanna, which means as IV rises, and we assume IV would be rising if the asset's dropping towards this price, that dealers will actually have to buy. So this will actually act as a repellent based on the IV changes here. So this can be confusing, especially if you start looking at things like Gamma. Now, we do have tools such as Delta Adjusted Gamma, which I'll talk about in a future video. But if you're looking at Gamma and you're also looking at Charm, it can be sort of confusing to know exactly what impact will be had. So it's still important to look at this stuff and just to get an idea in your mind how IV changes will impact buying and selling. But one trick here is on the left, if we choose the Dealer Hedging Requirement Summary, we can actually have this tell us exactly what will happen at certain price points. And so what's great about this is it shows the cumulative Gamma effect of, as well as Vanna and Charm, that we have on that previous page we were looking at. And notice it shows how much money was spent on this asset the day prior. So this means that $43 billion was spent on Tesla on Friday's close, February 3rd. So that way we can look at the dealer hedging requirement sum to see, okay, right now dealers at $192.75 essentially are negative. It means they're shorting the asset overall based on all of their hedging requirements combined, both Gamma, Vanna, and Charm. Now, one important note is this is with IV at 74. So what Vol.land does is they create their own version of VIX for a particular asset. And if you're not familiar with VIX, VIX is just calculating the volatility as a whole on the S&P 500 using contracts within 30 days expiration across the entire chain. Might be 28 days 28 days expiration. I have to double check that, but regardless, it's like a total impact of IV as a whole. So they're doing the same thing here, and as a whole, IV is at 74. So if this changes, this can influence the hedging impact. So you can actually look at it for the current price at the current day and see what that hedging impact is as the VIX for this asset changes. But here's where it really becomes powerful. So right now, if we actually put Tesla's real price, 189, we can see that drops. So before, dealers were short $225 million. Now they're short $37 million, roughly. If we keep dropping this, so I just keep clicking this down arrow, you can see all of a sudden, this is actually a very small impact, especially if we compare it to that 43 billion. So as we keep dropping this, we can see that all of a sudden they go from pretty much doing nothing at 187. So dealers are pretty much neutral at this point when it comes to Gamma, Vanna, and Charm overall requirements. But then they start buying as we drop lower. So we get to 185. All of a sudden dealers are long almost $100 million. We get to 184. Now it's at 223 million. 183, 182, and then all of a sudden when it turns green, these numbers will turn from black means it's pretty neutral, it's a small impact compared to the total equity, underlying equity notational dollar volume. But if it turns green, it means that this actually does start becoming more of a significant impact that we should pay attention to. So we know at 181 on Tesla, if IV is right around 74 as a whole, so that the VIX version, VIX for Tesla basically is at 74, dealers will be buying $610 million worth, which can certainly turn things around. So you could even go on your chart and mark that basically. So right around 181, which we can just do right here. And this is something I like to do for the cumulative requirements. And I also do mark gamma and Vanna levels as well. But we can say dealers buying. And of course you can check this throughout the day as IV changes to make sure that this is still the case. And then so as we keep going down, dealers keep buying more and more and more. So dealer buying intensifies, meaning that as we go down more, the likelihood of continuing to fall it becomes less likely. And what's really, really interesting about this that I want to point out is right where that dealer buying shifts. And now this is where I like to combine this stuff with an ICT concept of order blocks. So we're on the daily chart right here, right around that point where it shifts. And this is what's incredible to me because this dealer data always, I mean, more often than not, lines up with price action data using smart money concepts that ICT helped pioneer. But so this technically is a bullish order block on the daily because it's a down close candle before we get a break of structure forming a new high in this overall move. This was a prior order block. You can see we retested it and we moved higher. So as we fall into this area, just this alone right here, this is a daily order block we can mark, right? And we could set alerts on this and stuff like that. And then we would execute on the lower time frames to try to get the best buy that we could. So not only do we know that smart money market makers are likely going to be buying here because of smart money concepts, this is and how they operate, but we have this extra confirmation that as we get, so what was that, 179.77? As we get to 179.77, look at that. They go from short $225 million, where they're currently at 192.75, to long $713 million. And that's what's fascinating. So when you pair this total requirement summary along with price action on the chart, it actually helps point out areas on the chart that you might have otherwise not noticed, or it helps confirm that, okay, this is an actual significant order block. For instance, if I saw them getting more negative in here, then I would start trying to think, okay, why would this order block not be valid? Am I missing something? Maybe if they go lower to the halfway point, to the consequent encroachment point, something like that is where they'd start buying. So if we go back, let's see where dealers actually become short on Tesla. So let's go to 180. Sorry, so we're at 190 right now. If we start moving higher, we can see that, again, impact is pretty neutral compared to the total amount that they spent on Tesla as of February 3rd. And if we keep moving higher, dealers actually become more short, and it starts becoming, this is yellow, so the impact is starting to become more of an impact, not as big as what red would be. But we see they're short around 450 million, around 197, 500 million, 8, and then here we go. So we start getting into the billion-dollar mark as we start pushing into the 200s. So what I like to do is right where that became notable. So we'll put this $198 value. So around 463 million. Let's go back to the chart and let's find that 198 and let's just draw a horizontal line here. Oh, and this is super interesting. So you might find this fascinating. So we already actually rejected up here, which you can see. Now look at these two candles that rejected prior. So what we actually have here is these candles right here were actually rejecting at some point. Now if you look further left at what they were rejecting at, we actually see these candles in here, which these up close candles before this down move. Now it's not quite perfect because there are some gaps in this chart, and we should actually go down to lower time frames. But there's institutional order flow in here that has caused this rejection here, and finally this rejection here, right in this zone. And it even lines up with dealer data, seeing that as we push more and more and more and more into this zone, dealers just get more and more short. So right here we can see, I mean, this is red at this point. This is about $1.5 billion of dealer shorts happening as we press into 208. So as we got further up into here, at this point, dealers would just be heavily short, and this would be a great point if we were still long here, right? If we even made it this far. I mean, this is a pretty heavy doji, and then we have a nice bear hammer here, so you know, this is perfect time to close your longs if you are long. And who knows, we might come down here, retest it, and then push higher and get deeper into it, and these requirements could shift. But let's just say that this hadn't happened here, this strong rejection hadn't happened here, and we were to keep moving higher. Certainly by this point, I would have taken the majority of my profit off just from this hedging impact, this requirement summary alone. So I really love this feature about Vol.land. I think it's one of the most powerful features about them, and you can do this for any of the assets. They have all the top 200 assets that have the most options volume out there on the market, and the requirement page works great for all of them. And then, of course, you know, I like to see, all right, so this Vanna magnet is 200. So right there, I mean, it's a magnet, so we pulled right up into it and we started rejecting. But you can see it can just help you determine exactly where you should be long and short at, what strikes to pay attention to, and then it works really well when you actually pair it with the chart, which is a amazing thing to me. It just shows that, in my mind, it proves that dealers, market makers, they're all the same entity, they're all the same groups, they all have the same, they're all essentially working together. To what extent, I don't know, but I just know that this is confirmation of heavy manipulation, because it looks like this happens like this more often than not. So anyway, I hope you found this useful, and I appreciate you watching.